Right, first up, view on the Asian markets or how they're panning out. Remember, after yesterday's euphoria in the Asian markets as well as the US markets on account of the truce that was agreed upon between Donald Trump and Xi Jinping, now there is some money being taken off the table. The Asian markets trade lower amid uncertainty about the future of these trade relations, as questions remained about the actual details of the trade agreement struck between Trump as well as Xi Jinping. The Japanese index lower by about 0.5%, the Korean index lower by about 0.75%. Some cuts we are seeing on even the Straits as well as the Taiwanese indices to the tune of 0.75%. For SGX Nifty, it is indicating a mild downtick as we open, a downtick of about 0.3%. While it's outperforming the other markets, remember yesterday we did underperform the other markets as well. Now for us, the cues shift to tomorrow, where the RBI policy meet outcome comes in, and then day after where the OPEC meet happens, and then Friday we have the exit poll. So there are a whole host of domestic cues that are going to affect our market, and mind you, oil is still at $62 per barrel.
Okay, let's take a look at how the Wall Street ended then. US stocks closed higher with the S&P 500 having its best start to December in 8 years and Dow surging over 280 points. This after the US and China called a temporary truce to their trade war, triggering a relief rally. Major automakers jumped more than 2% after President Trump tweeted that China agreed to cut tariffs on US cars sold into China. CNBC's Aditi Roy gets us a wrap of all the action on Wall Street.
The U.S. stocks rallying Monday, though, after the U.S. and China agreed to a 90-day ceasefire, as you just mentioned, in the trade war, which has weighed so heavily on global markets for so much of the year. The Dow gaining 287 points, the S&P rising 30 points. The consumer discretionary sector in the S&P 500 was the best performer, rising 2.5%, and the Nasdaq climbing 110 points. Amazon rising nearly 5%. Among the other leaders, Boeing jumping 3.8%. Caterpillar also rose 2.4% after Bank of America Merrill Lynch said that the U.S.-China trade ceasefire presents a 20% upside for the stock. Chip stocks, as we know, got battered during the trade war. They have operations in China, and a large amount of their sales in the country climbed, with Micron and NVIDIA each adding more than 3.5%. Meantime, shares of General Motors, Ford, and Tesla all jumping more than 1.8% after President Trump tweeted that China agreed to cut tariffs on U.S. cars sold into China. Back to you.
All right. Meanwhile, Stephen Mnuchin, the U.S. Treasury Secretary, remains hopeful about a trade agreement with China. In an exclusive conversation with CNBC, Mnuchin said that this is the first time that the United States has a commitment from China. He said that he was optimistic about turning the commitment into a real agreement. Hear him out.
It's clear that President Trump is going to be the one who leads the negotiations, and the team will be an inclusive team. It's been a partnership of myself, Ambassador Lighthizer, Larry Kudlow from the White House, Wilbur Ross, and Peter. So this will be a team that is very inclusive. And we also have people from agriculture and energy. So there's a lot of work to do. This will be a real agreement. I think one of the things was very important is there was very specific understanding between President Trump and President Xi. And now it's the team's job to turn this into a real agreement that will have deliverables, dates, and real commitments.
One of the things that a lot of the articles are pointing out, Mr. Treasury Secretary, was there really was a change in tone, because leading up to the meeting, a lot of our officials, you and others, had been very critical of China, and China, in the same way, pushing back on whether anything would really change. Was there a tangible difference in the tone that you could pick up at the dinner?
I think so. You know, we had several meetings in advance of the dinner, but the final agreement was clearly an agreement between the two leaders, and there were no decisions made until the two leaders met. But this is the first time that we have a commitment from them that this will be a real agreement. There'll be structural issues. There'll be non-structural issues. There'll be issues on intellectual property, IP, technology, cyber, currency. And we're very clear in that we got a lot of work to do over the next 90 days.
Okay, so the other important thing that the U.S. markets are watching out for is the Federal Reserve meet on December 18th and 19th. Hear out what Minneapolis Fed President and Kenneth Rogoff had to say about their expectations from the central bank.
the president's criticism is probably working in the opposite direction of what he intends. And what I mean by that is, you know, if the Fed feels on the margin that maybe it's better to go a little slower with rate hikes just because of economic conditions, they have to worry that doing so is going to make them seem like they're operating at the behest of the president. And that's bad news because that could lead to increases in inflation expectations that they don't want to see. So they could be what the problem with the president's comments is it puts the Fed in a little bit of a box. They have to keep being going on with their planned rate hikes. If they don't do that, then they risk seeming soft and under the control of the president, and that's a message they don't want to be sending to markets. The president's comments are, in my mind, right on the economics. So I think that I see a lot of downside risks out there, soft global growth, and softening in housing in our own country. And so I think those kinds of downside risks should make the Fed very hesitant about raising rates. The problem is that he's the president. I'm a professor of economics, so I get to say what I want. He doesn't, and that's I think the challenge he doesn't seem to have sorted out yet for himself.
We have no idea what neutral is at the moment. It's changed a lot. It's just like you were in this spaceship and it shook up all over and you don't know where you are. The Fed, I think, is deliberately running the economy hot. I don't think they think we're at neutral. But we've been going so slow for so long with, you don't know, people coming into the labor force, businesses reluctant to invest. I think the consensus is let's let it go. We haven't seen inflation in ages. Let's see what happens.
All right, across the Atlantic, the European markets, they rallied after President Donald Trump and Xi Jinping negotiated a temporary truce to their trade conflict over the weekend. Auto stocks, they rose over 4% after the tweet coming in that maybe, the imports from China would not be given the kind of tariff that they have been, or the tariff that has been levied upon will not be levied upon. The European markets, while they ended about 1% in the green, they also ended off the highs of the day. It was the German index that led the gain among major indices, led of course higher by the auto stocks. Among the peripheral indices though, we saw some gains come by in the Italian index, up about 2.5%, led higher by Italian banks. So the fiscal deficit concerns in Italy are the key news triggers. Another big trigger is the Brexit talk. So after the European Union approved the Brexit deal, the House of Commons will now start a 5-day debate in Parliament later today. The final vote on May's Brexit deal will take place on Tuesday, December 11th. However, the legal advisor for the European Union's top court will publish his opinion today on whether the UK can cancel Brexit without asking anybody else for permission.
Okay, let's shift focus to the world of commodities then. Crude oil prices rise after US and China announced 90-day trade truce for their war. Now all eyes will be on the crucial OPEC and allies meet on December 6th, where there is widespread expectation that OPEC and Russia would agree to some form of production cut. Brent currently hovering above the $62 per barrel mark.
Balances for OPEC plus around 150 to 170 for Russia, which is likely to help the balances get tighter and support prices, rebuild investor confidence, which was otherwise lost in the last couple of months after their commodities are out. And in addition to that, the whole US-China trade truce is also supportive commodities, but even oil for that matter. We are likely to see support from here onwards, especially in the next one or 2 months, because OPEC cuts, along with the non-OPEC supporting countries, are only likely to help tighten the market, in addition to what is likely to be also positive sentiment in the market generally for commodities. So at JP Morgan, we do expect Brent to go towards $70 towards end of this year or early 2019 for that matter.
All right, that's interesting commentary coming in. Expect oil to go to $70 by the end of this year. So this is something that the street will keep an eye out on. With that, we slip into a short break, come back, we get you all the cues and news you need to know for trade this morning on the Loud Street.